Hey guys, it's me, Downtown Josh Brown, here with Michael Batnick. Welcome to The Ownership by Ritholtz Wealth Management. We are super excited for our guest today. We are talking with David Adelman. David, welcome to the show. Thank you so much for being here.
Thanks for having me, guys.
I'm going to read your official bio.
The one my mom wrote?
And you can stare into space. Well, all right. David Adelman is an American businessman and entrepreneur. He is the CEO of Campus Apartments, co-founder and vice chairman of FS Investments, and the founder of Darco Capital. David is also a limited partner of Harris Blitzer Sports and Entertainment, an industry-leading sports and entertainment group. And your portfolio is the Philadelphia 76ers, the New Jersey Devils, Crystal Palace, which is English Premier League soccer, football, and the Prudential Center. That's part of the portfolio?
Yes.
Okay. And you have, in my opinion, one of the coolest all-time origin stories for how you got started in business, how you learned to do business, and how you got to where you are today. And I would love to just prompt you and have you tell us all about it. But it starts with you as an 11-year-old making a bet, writing a check that you couldn't cash.
That's right.
On the basketball court.
It's hard to start young as a gambling degenerate.
Yeah. Okay.
So great to be here, guys. Thanks for having me. So, the story, and lots of people know this, I'm a Philadelphia guy, grew up there, and you all have a guy who's like your uncle, but not really your uncle, family friend type guy. So
yes.
I have one of those. His name's Alan Horwitz. His mother and my grandmother were best friends. He was a big brother to my mom her whole life, and he was Uncle Alan to me and still is. Very, close as could be. And so I'm 11 years old playing basketball with Uncle Alan, and I said, I bet I can beat you. And literally, most people let the 11-year-old kid win, okay?
Yeah.
Not Uncle Alan, right? And so not only does he not let me win, but I guess I had a thing as a kid. I'd be like, I'll bet you. I'll bet you. I was like, he's like, oh, you want to bet? I lost my basketball, my football, my baseball glove, and my little bank book that you had as a kid.
Which is everything you own.
It was like all my shit.
Right.
Okay. And so literally I had to go to his business, Campus Apartments, which is the business I run today, as an 11-year-old kid every Saturday. And I had to stack lumber or sweep sawdust. And at the end of each session, I got one thing back. Okay. Literally, they were sitting in I remember this. He had a Corvette back then, and they were sitting in the glass trunk, and he would make sure I saw it, taunting me. Oh, well, there's your stuff for next week. You got to come in and work. And
what do your parents say while you're working off this debt?
They thought it was great. They're like, oh,
they like the message behind it.
Right. Work. Don't be a gambling degenerate, and you got to pay your debts.
You're in the suburbs of Philly at this time?
What was the business? What was Campus Apartments back then?
So back then, smaller version of what it is today, but Alan had a great vision as a kid. His father passed away when he was 10 years old, and him and his mom started really early on. And the vision was that student housing was a captive audience. So he started systematically around the University of Pennsylvania, buying small properties, renovating them, leasing them to kids. And, just kept, back then he would just kept rolling it into more property, growing. And then, basically what happened for me is, so, after the 11-year-old, I got my stuff back. 2 years later, I'm 13 years old. I have my bar mitzvah. I have a whopping $2,000. And my grandfather was actually in your guys' business, and they're like, oh, do you want to give it to your pop-up to put it into stocks? Yeah. And I'm like, no, I want to give it to Uncle Alan. I want to do what he does. I'm 13.
Real estate.
Okay, literally, I'm 13. And my parents are like, no one thought I was going to say. I was like, all right, great. So he's like, well, what do you want to invest in? I'm like, what do you have? So literally, we got in his car, and we're driving around University City, which is around Penn. And I'm seeing he's like, well, we have this, I have that. And I'm like, that one.
And these are all students living
all
in
student
in
housings.
Okay.
Yeah. Yep. And he's like, well, why that one? I'm like, it looks like the biggest building. How did I know how to value real estate at 13 years old?
Did you ask what the cap rate was?
What's the EV on this?
Right, I didn't know that, right? I'm like, all this stuff. So I literally like a mob guy, I hand him a brown paper bag with $2,000 in it. And that was my baptism into real estate.
Is student housing the least cyclical business? I guess COVID was but outside of that,
So during COVID, we collected about 94% of our revenue.
And what's always close to 100?
Close to 100,
give or take defaults, whatever.
You have some defaults or, some family issues, stuff like that, but it's almost 100
good
always.
Business.
And so for us, what I learned is it was just a slow and steady business. I learned that it was so highly fragmented that every school, there was an Alan Horwitz, a mom and pop business.
Yeah, literally mom and pop.
Which Alan started small and then became more than mom and pop.
So you came in like Vince McMahon and you unified the whole thing?
That's what we did, right? We said let's bring it together. Let's make this popular. And so my thesis was this. if you guys, when you guys were in college and you went to go to the dining hall, the person serving you, kind of lunch, like what, was like usually a university employee. Then somebody was just like, why the are we having our own employees serve food? Let's outsource to Aramark, Sodexo, Levy, one of those companies that does that. And so like, I was like, well, why can't I be the Aramark's based in Philly. Why can't I be the Aramark or Levy of real estate?
The school doesn't want to manage properties.
It's not their core competence.
Wait, when did this idea incept into
So
your
that
brain?
happened. So I came into the business. I'll
So you're 14 now.
I'm right. I'm in that. Yeah. So he's
CFO.
Weekends. Yeah. I'm in charge of construction now. But he did so systematically from the time I was like 13 through graduating college. I worked. He had me do every job. Okay. Work in the office, leasing, accounting, maintenance, construction, plowing walkways, like when it snowed, like all that stuff. So literally, I graduated college on a Thursday and started working for him on a Monday.
You at University of Ohio State.
The Ohio State.
The Ohio State. So were you
playing for the national championship on Monday night? Just want to,
Sure. Notre Dame, right?
Yes.
Okay. Good luck with that. Were you scoping out the campus housing situation even while you were in school? Like, were the wheels turning? Like, oh my God, we have an opportunity.
I'll tell you a great story. So I'm actually going to the game with the guys I lived with in college, some of them, and so. We're all living off campus after we lived in a fraternity house, did that whole thing. We live in a house, like a 7-bedroom, like 1 or 2 bathroom house, like, kind of a shitty house. And there's one outlet in my bedroom, one. And so I go to the management office. I'm like, hey, I don't know what's going on here, but there's only one outlet in my bedroom. Could you guys install some more? And they're like, no. And I'm like, that can't be right because I've been working at like a real estate. So I literally so I'm 21 years old. I go down to the city of Columbus building code building. And I'm just a kid in line and like the guys there. But it was like Columbus is like a nice parochial town. They actually like, how you doing? Like, can we talk to you? It's not like here or Philly where like no one else. And I'm like, excuse me, sir, like, can you tell me the building code for like outlets in a bedroom for a house? And he photocopies it and it's like, oh, 1 every 8 feet.
Right. So you could have more.
So
if they had a willingness to do it.
Well, I take the piece of paper. I go back to that leasing office. I was like, my whole house would like outlets in all their bedrooms every 8 feet. Thank you.
Yeah.
That's what's
right. So that was like my first, kind of doing it. I graduate. I go there. Alan starts having me do everything. I want to learn all the jobs. It's great. And I immediately saw that like this was highly fragmented and there was an opportunity to do this in a big way nationally. So literally like I'm 25, 26 years old and I'm like, hey, I think we should start doing this in other places. And Alan's just a great easygoing guy. He's like, I don't know, man, we got like a nice thing going here. Yeah. I was like, no, I'm going to do this. He's like, well, then you should run this thing. And so literally like at 25, 26 years old, he's like, you can run this and like.
You're the CEO.
Yeah, I'm CEO.
Wow. How many employees are there at the time?
40, 50.
Holy shit.
So how do you make this decision for which school is next after Penn? Is it we want to move out regionally or?
Did you stay in Philly?
So we actually left Philly. We went to, we did something in Columbus. We went to North Carolina.
Why?
Opportunity. We just saw some opportunities. Just went bang, bang, bang. Like just started, kind of doing it. And then what really happened, put us on the map in 2004, 2005. I was like, maybe I got approached from some banks to go public. As a student housing company, there was already 1 or 2 others.
There's ACC, which I was invested in. American Campus
Right, there was one called Educational Realty Trust. None of it doesn't exist anymore. And
Did
then
Blackstone buy ACC?
Blackstone bought ACC, doing a great job with them. And so they were like, you should go public. And I was like, yeah, I guess I'll do that. And then we talked about it before. One of my really closest friends is a guy named Michael Rubin, who was a Philly guy. We've been friends since we're 24 years old. And he was running a really small public company at the time. And he's like, you sure you want to do that? Like, maybe you should do something else. I was like, oh, maybe I don't want to do that. Like, I don't know. I just kind of didn't know.
But you needed capital?
I needed capital. To that date, what we did in real estate is you would develop a project, create value, refinance it, and just keep rolling the dollars. Right. So you do one project at a time. I was like, I want to do more than one project at a time. So I needed capital. I wind up running a process and I wind up getting a global sovereign wealth fund to give me $300 million in 2005. And it's a pretty funny story because like I told the bankers taking me around, I want 300 million, not 100. Like, and they couldn't understand why. I'd never raised a nickel before. Okay. And I said, look, after you raise it, like, I'll tell you why.
But you have the cash flow to show that, like, there's a return on this money.
I had the experience to show
Yeah.
that if we put money to work and we did it like one deal at a time, like I wasn't investing all that money at once. It was kind of like accessible from the investment group. Long story short, we get a $300 million commitment from a global sovereign wealth fund. And now I can say of equity. So I'm like, oh, I want the I'm young and I want to I'm like, oh, we can say $1 billion of real estate, 300 million of equity, 700 million of debt. That's how the leverage works. I was like, I just did $1 billion joint venture with a global,
So
so
like the guy that wants the big novelty check.
So I go, oh, well, yeah. But that put us really, and then we quickly grew very, we've been anywhere from 18 states to 28 states, kind of fluctuates. As you kind of grow, create.
So I noticed that trend while I was in school. We had the Knox boxes at the University of Maryland.
Sure, I know them well. Yeah.
Okay.
Yeah. We're developing something in Maryland right now.
Are you? Okay. So that was like where you basically had to live, and it was upstairs, downstairs.
Shitty.
It was a mom and pop, the worst. They're gone now.
Yeah.
But then Hartford Towers, and then like it.
Yep.
It seemed to be going more toward the route where parents were like willing to help the kids afford these places, and they started to look more and more like hotel style living.
What happened and is happening is a lot of these schools that were like state schools where it was mostly in state.
Yeah.
Started getting out-of-state kids. You get the Long Island kids and stuff like that.
Well, then you need amenities.
Right? And then all of a sudden mom comes down from Long Island and was like, oh, no, this isn't going to do, right? And so, like, if you see our gyms and our fitness centers, our rock climbing walls, like, it's insane what we're building for these students right now.
Yeah. All right. So what you're looking for then when you select a campus area and you say we should have a presence here, I guess part of it is a dearth of other players where you could kind of like grab the mind share of most of the students. You don't want to like walk into a situation where everyone's already set up.
Right. Well, it's supply and demand, right? If there's already enough supply, like you're not adding value.
You want a school that's growing.
Or you think is about to grow. Like I always tell a story that 10, 11 years ago, it's probably 11, Clemson, before their football program was what it was not what it was, right? It wasn't even a top 20, it was never a top 25 team. And all of a sudden, but when you see some of these predominantly state schools all of a sudden rising, that popularity gets more out-of-state students.
Yes.
Out-of-state students pay more than in-state students. All of a sudden, bingo, those out-of-state students could afford to pay rents of what a new construction product costs.
Yeah. So my daughter, we're from Long Island. My daughter has friends at Clemson and at University of Georgia.
Yep.
5 years ago, nobody from my town was going to these places.
Bingo, right?
So is it the football team?
It is.
It's like sports. Kind of what leads it. It's the tip of the spear.
It is. It's sports and the awareness. And then the schools get smart about marketing and they say, oh, we're going to get these out-of-state students. If you look at the out-of-state tuition, I told you my daughter's at Boulder, right? The difference between out-of-state tuition, in-state tuition, it's 4 to 5x. It's great revenue for these schools.
Yeah. The schools have to balance having enough opportunity of slots for local kids.
Right. But
versus like, let's
broaden. You see it change rapidly.
Are you getting, or was there a point where you started getting phone calls versus going out and scouting new deals?
Well, two sides. One is, there's what we do predominantly is off campus, right? Most schools house their freshmen, so that's 25% of the capture rate. The rest is kind of to the open market. But there are times where the schools are looking to improve their housing or, kind of I give you the food thing saying like, we don't need to be involved in it, but we want to have a little control over it. And we'll do what's called a public-private partnership. We're actually doing that at Maryland right now.
Okay. So they'll say, we need you to build something great.
Here's a piece of land, but we want you to put the capital in. So they'll put the land in and we put capital in, bring our expertise, and that's how it goes.
Okay. So somewhere along the line, you get to the point where there's the industry takes notice of what you're doing and you win an award in 2009, Multifamily Real Estate Executive of the Year. And I want to point to a decision it seems like you made that in hindsight, I would guess you would say this is probably one of the best decisions you've ever made. And this is related to the area around Penn. They needed some investment. They needed somebody to step up and believe in the community. And I just want to quote something that was written about this episode. With crime spiraling out of control in the neighborhood, Penn asked local stakeholders for a financial commitment and political support to start the University City District, a special services district to improve the safety and cleanliness around campus. Adelman became the largest private sector supporter of the district, contributing $500,000 over 10 years to help Penn establish a $4.5 million operating budget for UCD. Somebody said something really nice about you. They said when most landlords in West Philly were hunkering down, he was the only one who contributed to this. You must have seen that your business and the state of the neighborhood are kind of intertwined, and you can't win if the neighborhood doesn't win, and probably vice versa. And you stepped up at a pretty critical time.
Yeah, look, that's exactly what it was. And, my partner, Alan, who's still my partner today, we were talking about it. And we're like, what happened was, Penn was always an elite institution and, all that. But the neighborhood was kind of iffy. There would be like a kind of a safe zone and a fringe zone. And then there was this kind of like, I hate to publicize, a famous murder of a professor like off campus, like near where our stuff was too. Like, so like all of a sudden you're like, wow, this is really bad. And so Alan, my partner and I were like, we have to like do something, but like we're real estate guys. Like we're not like public service.
Yeah, what do we do?
Like, what do we do? And so this whole consortium came together and they asked us for money and we were like, Alan and I were like, we have to do this. Like, thank you for setting it up. At least, we're just money. Like, let us like we got to save this. And by the way, if you're successful, like it was easy to see if you're successful, this is going to be good for our business, right? Like, so, like my two things can be true. We could do something good for the community and it can be good for us.
Yeah. I think there should be more of that. I know there have been attempts with things like opportunity zones over the years, et cetera. But like for better or for worse, if you have a facility that's on a campus and the campus is in a city, you need the city to prosper in order for people to want to go to that school and pay rent to you. Like 100%. It all has to work in concert with each other.
Right.
David, that $300 million that you took, that was for a particular deal. That wasn't equity in the company, was it?
No. So yeah, great question. So we never took equity at the parent company.
So why?
It's a great question. And I believe it's funny because I mentor a lot of investors. My family office does a lot of investing in companies where I'm like, owning less of something big is better. I had a vision on the real estate side. I thought I needed to maintain control, and I thought real estate was unique kind of asset class where I could maintain control of day-to-day of employees' business, things like that. But then you could venture with capital at the real estate level. So I felt like you could have a win-win there. So we have investors at the real estate level. You create value at those deals. It's good for the investor, good for us. We share those profits with our employees. How do you do that? But yet still, I didn't want anyone coming and telling us how to run the business or who to hire and fire. So, but that
sounds familiar.
That was a personal preference, though. I don't always give that advice to entrepreneurs that are building businesses.
Right. We sort of have that same mentality here. We're in an industry that's rapidly seeing private equity investment being made in RIA firms. We're not opposed to it happening. Yeah. We just don't want it to happen.
We want to be the last one standing.
We don't want it to happen to us.
Yeah. Well, listen, culture sometimes gets harder to maintain.
Yeah.
Depending on how that works. And, is the investor coming in have the same vision that you do? And, look, candidly, over those times, I didn't know how to kind of quantify that. Will that person want to be there, or are they going to, at your worst moment, say, well, it's time to sell?
So the parent company for everything is Darco Capital.
Well, parent company for the real estate's Campus Apartments.
Campus Apartments, okay.
Darco Capital's my family
That's your
office.
personal.
Yeah.
Okay. You've got this concept of treating private equity like it's venture capital investing. We definitely want to hear more about that. You make venture type investments, but you're in the private equity world. So your expertise, I guess, straddles both elements of building and running a company.
Yeah, I mean, the way I describe it is I have this unique, I don't know if it's unique, but I have like really bad ADD and I have OCD. Okay, so
you have both?
I have like both. Like, and so like I focus on things intently for a short period of time, and then I'm like on to the next one. So I am good at kind of thinking through strategic issues, putting things together, getting something going. But
and then other people do it.
Correct. So like Campus Apartments, I've had a partner there, Dan Bernstein, who's been with me 26 years. He's our president and chief investment officer. He is way better at running the business than I am.
Right.
Like much better. And so like knowing that like you can have partners or, people you work with that can play off your strengths or weaknesses to me is like how you create success.
We have the same thing here. We have somebody who's focused full time on like actually implementing the ideas that we have.
And that's me. All right. Rise Cold Brew Coffee, Cred.ai, Margot, American Harvest Vodka, Ali Pets. You're involved with Fanatics, which we'll talk about in a second. Tell us about your portfolio. What gets you to yes when people come to you with ideas, And what do you bring to the table?
So, and each of those companies are, very, very different. So, for example, American Harvest Vodka I own a alcohol business platform. American Harvest Vodka, a brand called Beach Whiskey, and that is a vertically integrated spirits company. So it's under the umbrella of Darco Spirits. I have a CEO who runs that, no outside investors. We have about 15 people who work there. So a little different than my norm of just being more like passive or non-control investor. Usually I'm a large shareholder, but not the largest. It depends on the situation. Cred.ai, based in Philly, one of my favorites, one of my larger holdings too. Interesting scenario. Two guys had built ING Direct, which was the first internet bank. If you remember back in the day, you would remember that. So kind of the fintech gurus. And then these two brothers who are like brilliant, smart tech guys, and they figured out an algorithm about how to take a debit card, and using this debit card creates credit. Okay. And I won't bore you with the technical way it works, but that partnership has now worked where we have a deal with Starbucks, for example, where we now are working with Starbucks and their 400,000 employees for their baristas and employees to just deposit their paycheck on our debit card. And that swiping of the card is building their credit. Okay. We created a project called EWA, Early Wage Access, where we can lend people money against their paycheck before it happens in a few days before. And so like there are things that we've done in that financial services space that are pretty interesting. Other ones that, what are other ones? So, Margot, run by two brilliant women based here in New York, who their Harvard business plan was, why do women's shoes, like for a working woman, like have to be uncomfortable to look good? And so their whole thesis was like, can we create shoes that are like fashionable,
transition,
affordable? Because like you see women like New York or Philly, they're walking to work in their sneakers and they've got their other shoes in their bag, right? Because they don't want to do that. They were like, that's insane. Like, let's create something. So the Alexa and Sarah just created this great company. They also, I learned this from it, that women's feet aren't the same size necessarily. So one of their lines is custom shoes. You step in a thing, it measures your foot, boom, it ships you the shoes too. That
your left and your right foot might be slightly different.
Might be slightly different. So and so that was one. Ollie Pets, you just mentioned, for me, that was kind of early on the dog food. If you have dogs, which I never had them growing up, but now like, my you've got like my kids, my wife, my dogs, I'm kind of last in line, right? But like, so the way my dogs get treated with their food and their treats and all that stuff. And so this premium product that is, delivered to your home, ordered on an app, all of that, like, just like high-end food, not the stuff that's sitting in the can for like, 3 years is, the new thing. And we got in early.
So one of the things about venture capital these days is that everyone has money. Money's not really the problem. Attention is the problem that needs to be solved. So I would imagine you have a platform where when you come to the table, all terms being equal, the difference is, hey, look what else I can do besides just write you a check.
So that's so I pride myself on really two things. One, the traditional venture fund will be great for your company when it's 80 degrees and sunny. Okay. But like when it's cloudy and there's storms coming, like during COVID, I can't tell you how many of our companies that were venture backed needed capital, but those funds, they invested out of fund 2 and they couldn't put more out of fund 3. And we were giving lines of credit to our portfolio companies.
Right.
And so like for me, like if we invest in something, every now and then, like, I'm sure you see this, like guys will pass the hat and it's a cool deal. And like, I know nothing about it. I do that less and less. I like it when I know who the founder is. I know what the product is. And by the way, is it adjacent to campus apartments or one of my other businesses where I can add value?
Right. It could be some kind of cross promotion.
Well, you think about like campus apartments. We have about 25,000 students that live in our buildings. And you think about like the disposable income they have, they're kind of taste makers. I can't tell you how many consumer brands are like, hey, here's a product. We'd love you to put it out to your
that's
students, right? Like think about that. So if I think something's interesting and, it's testing well in our kind of ecosystem, I'll invest.
Where do you tend to invest in terms of like revenue stage where these companies are?
Early.
So pre-revenue?
Pre-revenue and where I'm betting on the jockey.
Okay.
Right. And so to me, and by the way, I hit a lot of zeros. Like, I
course,
don't want to look glamorous here. Like, we lose a lot of money.
Pre-revenue, it's part of the.
It's part of the bet, right? You got to do that. But like, if you have the right product, and then I look at it, I'm like, well, what's the barrier to entry for the next guy who might be smarter or have more capital to beat us? And if there's like a moat around that, I'm like, well, that's interesting. I like the guy or gal who's doing it. There's somebody I want to back.
I want to get into Fanatics a little bit, your relationship with Michael Rubin, and then we'll talk about how you came to own a piece of the Devils and the 76ers, which tough game against the Knicks last night. We don't have to spend a lot of time on that.
Man, it was brutal. It was brutal.
So talk to me a little bit about, you mentioned Michael's almost a childhood friend of yours. How did that all come into being? Because from my point of view, the ability to do business with people that you're also friends with is like one of the greatest.
The best.
It's got to be right up there with the greatest feelings in business.
Yeah. And so, Michael and I we grew up in kind of outside Philly together. We were both, entrepreneurs in Philly. We met in our mid-20s, 25, 26 years old, two entrepreneurs building businesses, and just, kind of like hit it off quickly and just, been like brothers ever since. And look, he is, like, I think I'm pretty good at business. He's next level. I mean, Michael.
I was going to ask you, in your 20s, did you look at him and say, this guy's going?
I just looked at him and I said, okay, at least I have a friend that's like running it. Like, because I had a lot of friends that were like lawyers or accountants or whatever. And like, they're kind of like done at like 6 o'clock and like, I'm not turning off. And I'm like, is there something wrong with me? But to have like another friend who's 24/7, I was like, all right, maybe that's what our normal is. Yeah. Right. And so we would just kind of grind and go and have ups, have downs, things like that. But like, we weren't afraid to take a swing. And so, watching him build his businesses and do what he's done has been unbelievable. I mean, what he did with, selling his old company, rolling out Fanatics, building the platform around it, what he's done with collectibles right now and cards and trading. And now, I have no doubt that he will be a differentiator in the sports.
He's an empire now.
Yeah.
It's like beyond just a collection of businesses.
It is.
Okay. And then he had to sell his stake in the teams, and you were ready. You had a previous opportunity, but now you were really ready to do it.
Yeah. No,
okay.
it's to be able to own your childhood team is, very cool. And so when, as people know, Michael had to sell his stake in the Devils and the Sixers because of the sports betting. You can't be an owner of a team and doing that.
Right.
Michael knew that I had wanted to get into the professional sports business, and we'd looked at some other stuff. And when this came up, he was like, "Listen, we'll just do it between us." Like, it was like literally like a 30-second conversation, like family. Like, here's what I think is fair. I think this is fair, and like we did it, and that was done.
What your wife and kids say at the time? Were they like beyond excited, or were
they
like, "Are you ever going to be home?"
They were kind of like, look, they kind of like they got it. Like first of all, the Sixers, they kind of understood. The Devils took a minute, and we talked about this earlier. Like, growing up in Philly, I was a Flyers fan, and
right.
Now like it took me a minute to start wearing Devils gear in Philly. Like, am I going to get hate? Like, I had to kind of like get around that a little bit. But like, honestly, like, our fans, the Devil fans, are amazing. Like, the Prudential Center has like a vibe. Like, so I'm all about energy. We haven't talked about, I'm going to build a new arena for the Sixers and the Flyers in Philadelphia. And so like, I'm all about energy and hospitality and environment. The Pru is just a really cool place.
Let's go there now. You want to build something for the Sixers, and it's obviously hard to do anywhere. I feel like on the East Coast, in cities on the East Coast, it's even harder than if you're like in Arizona, just from a space constraint standpoint. I feel like the competition with arenas and stadiums has been ratcheted up substantially. When you look at what Steve Ballmer has built for the Clippers, you look at SoFi, like the new standard is significantly above 20 years ago.
Oh, it's not even close.
It's not even close. These are billion-dollar facilities.
Oh, multi-billion in some cases. Because like, you think about the old facilities that were started in the 90s. And I put like, Wells Fargo Center, where we play, Boston Garden, where Chicago plays. Those were designed with a purpose to be multi-sport, right?
Yeah.
And be good for anything.
Yeah.
And they were like the first generation of like new, right? Before that, it was probably more smaller, intimate facilities.
It's like municipal arenas before
like the Coliseum.
Like Nassau
exactly,
Coliseum.
exactly.
Right.
Or like the Forum, right, where the Lakers played before
Yeah.
Crypto or Staples Center was built. Exactly. So this evolution is happening. And so, for me to be able to build our new home, we just, we had a big announcement this week about us and Comcast coming together to do it together. We spent the last 2.5 years kind of pursuing our own home for the Sixers, separating from the Flyers. I'm happy to say that us and Comcast came back together, and we're going to build the best arena in the world in Philadelphia. I'm fortunate that I get to lead that effort. And so
How long does it take?
Construction is about 30 months.
Well,
Design's about a year.
and what about just like permits and
Oh, well, now you're talking
city-
about city stuff,
yeah.
right? Right.
Well, like the Chase Center that they built in San Francisco for the Warriors.
Yeah.
I think that was a 7-year
Sounds right.
odyssey-ish.
Have you seen it?
I haven't been
It's
yet.
very cool. They did a
I
great
would
job
imagine
there.
it's state of the art.
And what's really, there's a new generation of arenas. So that generation was Milwaukee, Fiserv,
Oh, yeah, we've been
very
there.
cool.
There we've been.
Intimate, right?
Yeah.
Chase, very cool. The Kraken's place in Seattle, if you haven't seen it, they did a really cool job of taking the old site and building a really, to me, like that intimate fan experience. So the seats are much closer together, kind of like a Nassau Coliseum or a Forum or, that.
Because you want that vibe in the arena as a
100%,
big part
right?
of like the product. So, like, why do I go to the game?
Right,
You should
versus
feel
watching
like,
on your
you
sofa,
should feel
right?
like it's an experience.
And so, for me, everyone's got a different opinion. Steve Ballmer did a very cool thing at Intuit. Steve is a basketball fan, a basketball fanatic, and he designed it based on how his experience is. So Steve's like, I want all these bathrooms there so you are back in your seat very quickly. I don't want you to have courtside food service because I don't want anyone blocking your view.
They don't have TVs at the vendors in the hallway.
Correct.
They want you to get your food and get back into the game.
Correct.
Okay.
And that's Steve's
I
prerogative.
like that choice.
Look, I think that's his choice.
Yeah.
So for me, I look at it and I say, like, and you guys, we were talking about games before. When you go to a game with someone or a sporting event, like, that's an experience, right? If it's a friend, if it's a client, right? That schmoozing that goes on isn't just at the seat. It's while you're getting a cocktail, having a meal,
Yeah.
running back and forth. So I want to make it transferable. But that's my opinion, right?
Yeah.
And so we want to create a fan experience that is a premium experience from the seat to the restaurant to wherever they want to go.
We brought the whole media team last week to Madison Square Garden for a Knicks game, and we sat in the Madison Club, which means none of us were pinned into a seat.
Right.
We could walk around, there's sofas,
Great
there's
experience.
stools.
They did a great job.
That's like one of the best ways from my perspective. I think I'm more on your side.
Yeah.
I don't need to be that locked into every game I sit at.
I just think it's the experience and who you're with and entertainment. And you're going to make me stare at that Knicks hat the whole time, aren't you?
You know what I've never seen? Maybe it's logistically impossible, but you see this at football stadiums, at baseball stadiums, that when you're getting a hot dog, you could still see the field. Like,
Yes.
At a basketball arena, I've never seen that.
So it's funny.
They built
I
City
think
Field that way.
That would
I
be
think I
sick.
like that. And so we're talking about that. Like, how do you create club areas that allow you to lounge, watch the game, kind of do a little of both for like the casual fan? And
Yeah,
I
you have a
agree with
line
that.
of sight onto
Exactly.
the main event, but
Exactly.
you're also not sitting in the seat.
So this is a dumb question because I know the answer, but is owning an NBA team a good business?
So here's the answer. The answer is, I say this to everyone, owning sports teams is really fun when you're winning.
yeah,
Okay,
because
right,
it's your
right,
reputation
right.
in the town now.
Right. When you're not winning,
And especially when there's an expectations of winning, like there was in Philadelphia going
Yes.
into this season.
and look, we've gotten pegged with some bad luck and injuries. Like no one saw this coming.
Who
and-
saw Joel getting hurt? Nobody.
No, right.
Just kidding.
I mean, oh man, you're brutal. I mean, look, last night, like, I'm not proud of it. Like, there were a lot of Knicks fans in our building. I was like, and I knew it was a bargain. You guys are close. But our playoff series last
That was
year,
amazing.
it was
So much
amazing.
fun.
Like, I got to tell you, like, for me, I just love sports because I sat in an MSG and I could feel the energy of the fans. And I go sometimes when the Devils play the Rangers or like when the Sixers are there. And like that energy is awesome. And to me, that's what sports is all about. And so like
Well, you have that at Eagles games.
We do,
like
right?
Big, like
100%.
notoriously. But you have that fan passion.
look,
there.
I feel like, everyone's biased to this fan. To me, Philly are the most passionate fans in the world, right? I mean, look, I guess you could argue New York fans because people still show up for the Jets, right? Like, but like, at the end of the day, like our fans are rabid. They know what they want.
There's something different than the Northeast.
Yeah, I agree with you. It's just energy.
I think like as far as like the passion of the fan base, I think most people would say like it's the Bills and it's the Eagles.
Mhm.
and then most other teams is,
I agree with that.
I think the old school Raiders maybe kind of had an element to that.
Correct. But
Okay.
by the way, it's like generational, right? Like
Yeah.
literally, like we're at the press conference on Monday, okay, announcing this new arena. Okay. And one of the things that we did is also work to deal with Comcast that they're going to join our bid. We're going to go try and get a WNBA team in Philadelphia. It's important to me, important to my partners. Like I'm really passionate about it. I'm a girl dad. Like I think that would be
it's hot, and it's
awesome,
hot,
right?
People are into
So
it.
you're one of the people that's going to be part of our ownership group is Wanda Sykes. She's a Philly girl, and she's loves it. And so we had her just say a few words, kind of as part of our bid, and then she's like, "Go Birds!" Right? Like I mean, like everyone is that is the Philly vibe.
Yeah.
How are you feeling about this week?
I don't want to get cocky at all, but I'm kind of happy that we're playing the Rams and not the Vikings. I don't know. It just felt like the right.
I think you guys got
it.
It
Felt like the right matchup. So
Jalen Hurts' limitations have been pretty visible. And this is like his arm strength. Pretty visible.
You wanted to comment on that?
Is that a comment or a statement? Right? Is that a question?
I'm a Giants fan, so
Right.
but I'm just saying.
Right.
All right, but you're having fun, and
I am.
The team.
Look,
team is in the playoffs every year.
Look, to answer your question, like, is sports a good business?
Yeah,
sports. Sports is. We were talking about like investing earlier. Sports is like a long-term investment, like your 401k, right? Right. You're not going to get immediate benefit from it. It's back end. Hopefully, you build a good business. You do right by your fans, and like as Josh Harris and David Blitzer, my partner, like they always say, like we all agree, like it's not our team, it's the community's team. Like you're a steward of it for a moment in time, right? That's going to be there long past I'm on this earth and you're on this earth. Like there'll be a team, someone will own it, someone will make sure that it's got a great organization, and so it's a great business, but it's hard. Like I'll tell you a funny story. Like last year, like Pat Beverly was on our team, right? And Pat's a
Colorful
fun guy. He's fun. And by the way, like sitting courtside and hearing Pat talk his shit is like just a full it's amazing. And Daryl trades Pat and does it all. And literally, my wife calls her. She heard it. She's like, "What the f***? You traded Pat?" Like. And I'm like, honey, it is a business. And she's like, this is bullshit. But like, that's what happens.
And Cam, now we got Cam campaign.
Right.
I hated him last year. I was like, that guy's so annoying. We love him now.
We like him being annoying now to other teams.
What about private equity money coming into the NFL? That's a big story.
I think it's great for a couple of reasons. One, I think that it becomes the democratization of sports where now mom and pop or retail investors or like not, once other people can participate in that, right? Because it is a great asset class.
Rather than one family owning it, you can have a fund where people own the fund and the fund has a stake in the team. I agree. And just look at how invested the Green Bay community has always been around Lambeau and that team. They feel like the community owns the team.
Well, the other piece that it does that I don't think people are thinking about is, look, I personally believe that like closely held ownership of sports teams is good. So that way there's someone in charge, decisions are made and all that.
I'm a Giants fan. I don't think it's good.
I saw the planes flying around. But you think about what happens generationally, like there's estate taxes or you need more money or the families, because these, some of these sports, don't, NFL is different because the NFL makes a lot of money. But, other teams like hockey, basketball, you make most of your money in the playoffs.
Right.
You don't make the playoffs, things happen. So your ability to sell a stake, raise capital to invest in the team, which you saw, some people do, I think that's great. I think it also allows passionate owners not to have to sell when they're diversifying their estate planning stuff that you guys would advise. You'd say, hey, one of your clients owns, 80% of his wealth is in one asset. You're going to say that's not really smart. Well, this might allow that owner to diversify a little bit, take some chips off the table.
It's so funny. You talk to people who are part of a fan base when the team gets sold.
Right.
And they have this preconceived notion of, oh, well, our team just got bought by a hedge fund manager and he was compounding at 18% a year for 2 decades. So I think we're in good shape.
Panthers fans have entered the chat.
Well, it works out great for the Mets eventually. Doesn't maybe work out so great on other teams.
Right.
Or then you have the stereotypical situation where it's venture capital and everyone thinks they're about to be the Warriors.
Right.
And it's like, okay, those guys are probably great owners, but also they got Steph Curry at 8th. In the draft. So it's like there's not one way that things will go based on who the owner is.
But usually the problem with new owners is they try to make a splash, like the Walmart family did with signing Russell Wilson.
Right.
Like that's
or Phoenix last year.
Yeah, like Ishbia. That's very typical.
Yeah. Well, I think it's a couple things. And Russ is a friend, so
no offense.
But what I would say is I think that owners, it's a business, right? And I think successful business owners have to remember whatever made them successful in their business, which is probably building a great management team and having, kind of a deep bench of people to help run the organization, needs to transfer to sports.
But it's ego. Like, how do you not?
It is, but at some point, I think the best run teams, like the Eagles, right? Like, Jeffrey Lurie is a great owner, but
and Howie Roseman's been there forever.
Howie Roseman, I'm sure he's behind the scenes doing it, but you have to trust your GM, the people who are in charge of talent and personnel and data analytics and all of that stuff, and you can't run it with your gut.
Last thing we want to do, and then we'll let you get out of here. Want to talk a little bit about private equity and wealth management, because that's our business, and your business, and they seem to be melding more and more. And I know you have RIAs as investors in some of your funds, and we just love to hear how that works and what that experience is like from the ownership side, from your side, working with wealth managers and their clients.
Yeah, so we started a business in 2006 called FS Investments. It used to be called Franklin Square. We're now at about $84 billion of AUM, and all diversified products, but all bringing alternatives to the masses. And we partner with firms like yours to say, like, here's you guys might have an expertise in stock and bonds and munis and things like that. Alternatives is kind of a little different, and we thought it made sense to kind of bring that alternative market to more people, right? Where wealthy people and high net worth people have been investing in hedge funds and private equity funds for years, right? But if you could make it more mainstream, which was what our goal was, and we could do something with RIAs and wirehouses and things like that, it is a partnership, right? You're looking out for your client. You get pitched a lot of stuff. Some of it might be total dog shit, right? And like, you have to do your proper diligence on it. And what we're trying to do is create a transparent product so that you and ultimately your client feel like their capital is going to someplace that's safe. And it's been a good business for us. It's been a good business for the people we partner with, who put their clients in it.
So the typical RIA is most concerned when allocating to a third party. Like, the RIA the advisor at the RIA knows that in the end they're answering for whatever goes on. So that must be like a big part of that effort, is just transparency and making sure the advisor knows they're not going to look like a schmuck.
Look, I in any business you're in, right? It's like no one wants surprises, right? So like
upside surprises maybe,
right? All right, upside. But
we'll take those.
But I say to everyone, I'm like, listen, like, bad news doesn't get better with time. Okay, if there's a problem in any one of our businesses, I'm like, fucking tell me now, because it's not going to get better, and let's just find a way to fix it. Because like, if there's a problem with an underlying investment that your client's made, you want to know early, right?
Yeah.
And so that you can talk to the client, you can figure out what happened.
Even if you can't do anything about it, there's no sense in putting off the conversation.
100%. And so like, if you can figure out how you have that transparency, and look, in your business particularly, people are looking at you for that trust, that confidence, that education. I think that's really important, and they take that seriously. No differently at Campus Apartments. You think about what my asset is. I have somebody's most valuable asset, which is your kid.
Yeah.
Okay? Like, we wake up and tell our employees every day, like, nothing else matters. You have somebody's child living in our buildings.
Riding the elevators, breathing
doesn't matter
the air.
what it is, right? Like, so like you think about, what is your North Star in any business, right? And so as long as and I say this to all the people I mentor, like, what is your North Star? Okay. What is the right and the wrong? Okay. You might get away with the wrong thing for a small period of time, but it won't be forever. And the last thing I say is, you get one reputation. If you guys did something inappropriate to do with your clients, how are you guys ever going to be in that business again?
Yeah.
Right. So like, your brand is everything. Mm-hmm. And so like, I say that to everyone I mentor. I say it to everyone I partner with. I'm like, we're going to be partners. You will ultimately have some bad news. Not everything goes like this. You can come to me with that bad news. Okay. But come to me early and make sure I don't hear from somebody else.
David, we want to thank you so much for your time and wish you congratulations on the partnership with Comcast for the new arena. I'm sure people in Philadelphia are like over the moon that this is going to happen. Yeah. Great for the team, great for the fans, great for the whole city. So congratulations on that and all your success with Campus Apartments. It's an incredible story. I love how it started. I loved how you paid your dues as a kid.
Yep.
and that those lessons are still with you in the way that you're mentoring young people today. So we think it's awesome. And
I appreciate
thank you so much for being here.
All right, good to be here, guys. Thank you.
Awesome. That's it from us. Thank you guys so much for watching. Like and subscribe and do all the things. And follow David literally in the parking lot on the way to the game. You don't do social shit.
I do.
What do you do? Instagram?
Instagram's my biggest
I think
thing.
I follow you on Insta.
Yeah, we do Insta.
Okay. You can follow me back. I don't know if you know. All right. Follow David on Instagram. Follow the 76ers. Follow Campus Apartments, and we'll talk to you soon.